All right, so welcome everyone. It's I'm just looking through just some of the folks here. Some people I've seen for the first time, some I've worked with for years together, and ones in between as well. We're at 75 people here. I think it might get even rowdier. We'll see, but I think that this session is going to be helpful. So let's let it speak for itself and let's get rolling. Okay. All right. Started with getting unstuck in the stock market. This now evolved into also advanced topics that should help everyone, whether you're new, whether you're existing, all of those kind of things. So let's see what we've got here. So on WhatsApp and on email, I think I made a lot of promises about what to expect and all kinds of things. Here's a little bit in for the agenda, what's sort of coming. So what you'll learn. Will the stock market actually make money in 2025? How to get unstuck if you began, but you never really got things rolling, or you started for a little bit, then you stopped, or if you're in already, which plenty of people are, how to increase your gains. New investing strategies that actually I'm not shared with anyone that evolved sort of over the last year when the markets changed. So some of these, and you can apply them right away. And then Investing Club 2.0, this has been kind of a long time coming, and a super program, whatever that means. So just to be aware, you're going to see by the end of this period, if you're totally new and you're like, I don't know anything about investing, or you've been with me for years, there are new things that both groups will learn, I promise you. Okay, so let's get into it. I think I try to set this for 45 minutes. We are about 5 minutes in. So let's see if we can get through in 40 minutes. And if not, then I'm sure we've never gone over before. So that will never happen again. So a basic question I'm sure we're all wondering if we're in the session is whether the stock market is going to make money this coming year. And ideally, will it make us rich? How much is it going to go up? How much money can we make from it? At the end of the day, that's why we're here. So question 2024, right? A lot of people had predictions of how the stock market was going to be. I'm curious. What was your guess about how much you thought the stock market would go up in 2024? Just jot in the chat. Like I know there was a lot of uncertainty with the economy, things like that. What did you guys think? Do you think it was going to go up 5%? Let's say the S&P 500. It's going to go up 10%. Was it going to go up 50%? Let's just get some interaction here. What do you think it was going to go up last year? Okay, Karen 10%, Debbie 20%, Shlomi, okay. They're coming. Okay, 8%, 10. Oh, negative 8% from Talia. Oh, no, maybe that was someone. Okay, Talia 8%. Leora, Sid 10%. Lots of familiar faces and names here. This is awesome. Shia wasn't sure. Okay, so we've got sort of, around the 10% mark, something like that. Let's compare it to what the pros estimated. So basically, the investment banks, the major ones, you have JP Morgan Chase, Goldman Sachs, all these ones, they predicted the stock market was going to go up on average about 5% in 2024. It went up way beyond that, 23%. And you've got all of these guys that are the experts, Jamie Dimon, he's the CEO of JP Morgan. Ray Dalio owns one of the biggest hedge funds in the world, Bridgewater Capital. I guess I would say that I started to see on news articles these white-haired old white guys kind of crying about how they thought the stock market was just going to break itself and not go up and all kinds of like doom and gloom. I got many messages from you guys from time to time. Hey, is the stock market going to crash? What's sort of going on? They both came back and they're like, they predicted, Ray Dalio said, the US is going to see a recession. Stocks have further to fall in 2023, 2024. Definitely did not sound good if you were an investor then in the investing club. Jamie Dimon, he said there were storm clouds headed. I remember he said like a hurricane. All of these kind of analogies were not working. Hold on one second. I have one or two people that are asking how to get in. Let me just help them for one second. Okay, hold on. Be with you in one second. Okay, but clearly we can see that these experts, these highly paid individuals at banks also don't seem to actually have any idea of how the stock market performed. In 2023, they also got it wrong. They predicted 2023 it was going to go up maybe a little bit more than like 7%, 6 to 7%. Totally wrong as well. So on one hand, we're like, okay, the stock market is much more resilient than we might have thought. But the next question is the stock market is basically at an all-time high. It sold off a little bit recently. Isn't now kind of the worst time to invest? Anyone want to share? We think it's a good time, a bad time? What do you guys think in terms of starting to invest right now?
It's always a good time to start investing.
Okay, okay, I like that. Any other thoughts?
The prices are down right now.
Okay, yeah, the market's pulled back a little bit, so that's also good. I think that was Jenny, if I heard correctly, that voice. Okay, nice. Anyone? Wow, we're at 100 people here.
Okay.
Awesome. Any
Yeah,
other
it's
any
always a
other
good time.
thoughts? Good time or bad time to invest?
Good time.
Okay. I want to share with you a little bit of what I'm seeing in the market here. So there's a certain individual that is unlike any individual we've seen in this respect before. You know, Donald Trump is the only president that would actually brag about how much he could shoot the stock market up. You know, this is from his last term, 2020. You know, stock market is at an all-time high, 70, 80, 90% up. You're only 50% up. What are you doing wrong? You know, his ego is invested with the stock market. He's a businessman. The Dow Jones closed above 29,000. You're so lucky to have me the president versus Joe Biden. When Bitcoin hit $100,000, he tweeted, "You're welcome." And so you can see this is much more recent, 2024. So old habits definitely die hard. So we have a president in office as well who loves to try to push up the stock market too. That's just one factor that's kind of nice. We have also the interest rates are going down as we've seen already. They've gone down, but they're going to go down more. Hold on one second. Just a few more people trying to get in. Let's see here. Two, one. And let's see here. Sorry for the interruptions here. It's because of the size of the group. It's okay. If someone's in a group that's asking how to get in, you could please send them the password. That would be helpful. Okay, let's go back to it. So we have a president that shows off and loves the stock market to go up. Interest rates are going down, and one of the biggest factors that's been looming over the stock market in the US is also the debt ceiling. And so now with Elon Musk and Doge, although they definitely do not have enough of a plan right now where the debt ceiling is not still a major issue, they're actually taking very practical steps to start to bring down spending. The full plan has not been revealed, but that's sort of the colossal thing that's caused a lot of fear in the stock market because they couldn't service the debt the interest on the debt. So many of these factors are actually very, very positive, and this is probably the best time ever when that biggest issue with the debt ceiling is actually potentially being tackled. So looking at these things, it's like, okay, that's nice, but let's look at the stock market, how it's actually done. So this we all know is the NASDAQ. Over the last 5 years, it's been up 152%. What does that come to? You divide that by 5 years, what is it on average? How much is it up? This is easy math. 5 years divided
Percent,
by 152.
30%.
Okay, so look, even with the stock market crashing, the stock market is still up on average 30%, and this is just buying the NASDAQ. You look at the last 10 years, what's the average return in the last 10 years?
40%.
So this idea that all the gains are behind us, even when there was a big crash. And again, we've said often crashes are Shemitah years. 2001 was Shemitah, 2008 was Shemitah, 2022 was Shemitah. Not that we're going to do our whole strategy based on that, but even with bad situations, would you have guessed that the stock market is actually up 40% on average in the last 10 years? Or is that a bit surprising? Anyone? Is that good? Is that bad? I mean, like 400% in the last 10 years. It's so we can see that it's not like every time we think all the gains are gone, we actually see that the market still continues to provide. You have the S&P. Basically, who can do the math on this? Over 5 years, what's the average return on the S&P?
20%.
Okay. We zoom out even further. It's basically held just about the same over the last 10 years as well, maybe 19%. But again, this is just giving us what this is showing what the opportunity is in the stock market if we are investors. If we stick with it and we don't get stuck. Here's the most basic investment we're all familiar with, just buying an index of the stock market. And here's actually how it's done to give us an idea. Okay, so there's a lot of people that start and they stop because of certain ideas they get in their head. I just want to dispel a few things so we don't hold on to these rumors, these myths. The stock market does not care about a lot of things. There's a lot of things it does not care at all. It does not care how old you are. If you're like, look, I have 1 year to invest. I'm 2 years old. I'm 80 years old. You can still make money in the stock market. My youngest son, Jonah, he's 2.5. He has a portfolio. It's up. It's up, I think, 30% in the last year and a half. Anyone can make money. It doesn't matter. You're not too late because the stock market is still growing. If you are bad at your job, if you get fired, if you're bad at school, if you think that you are not smart, any of these kinds of things, the stock market, it doesn't care. You can still make money. So this idea that I've got to be some kind of like this kind of individual or I need to be versed in finance, all this kind of stuff, the stock market does not care. It can still pay out for you. If you're like, I'm broke, I've only got $50 to start investing, I will show you today. The stock market doesn't care. You put that $50 in, you get started that way, it will still grow for you. So if you're like, I don't have enough money, I cannot begin, actually, it's totally a good time anyway. It's good to learn with less money than making mistakes and losing money. And if you're lazy as hell, what we're going to see is always this only takes like 15 minutes to do. It's not something that should take over your life. And importantly, if you have tried and given up a bunch and you're like, oh, I can't get this to stick, it does not matter because all you have to do in the stock market to start making money is two very simple things. Choose what to buy and buy it and wait. Maybe you didn't have that skill set yesterday. It doesn't mean you can't have that skill set today and tomorrow. That is the only skill set you need to know. It doesn't matter any of these issues, any of this baggage in the back of your head. That's all that it takes to succeed in the stock market. We need to know what to buy, so we got to choose good investments, and then we need to actually buy it. We need to know which brokerage, and then wait. I keep getting pinged by a million people on WhatsApp. I'm not sure if there's okay. Still, some people can't enter. I'm not quite sure the reason. Okay, well, I will send them the recording. Okay, just quick background. Who am I? Almost all of you guys know me. I'm not giving my life story, but why should you listen to me? Basically, I teach investing. I think I met a lot of you actually at the talk for Nefesh B'Nefesh and Living Financially Smarter. I give seminars at companies like Meta. There might be a few people from Meta here from the seminar I gave. At companies like Google. I think I share with you now teaching investments at Tel Aviv University. But none of that really matters unless I can help you get results. And I get messages from all of you guys, many of you very often about, oh, my portfolio has actually made 35%. I'm up $13,000. Another one I got, this is literally from, it doesn't have, it was from a week ago, up, made $100,000. This is someone in the program that took the course. What's very telling is that I also teach teens through the city of Renana. I have a group of about 60 teens. This is a snapshot of their virtual portfolios. I couldn't put all of them in. 90% have made money. Now, as I'm going to get into now the new ideas to share with you better, more tactics, why do you think that 90% of them have made money? Is it because these are the smartest teens in the world, or what's the reason?
The market just tends to go up.
Who said that?
Me and Daniel.
Daniel. Daniel, you got the answer. The market goes up 71% of the time. If you are in the market and you're not buying stupid, overly risky things, your money can grow. Now, you might say, I want my money to grow faster. I'm going to show you in a minute how to make it grow faster. But the main thing with getting unstuck is just getting so clear on the fact that if you are in the market and you're patient, that is the direction the market goes. It's not always linear. We sat through a crash together in the investing club, which was brutal for a year and a half. I said, invest, 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 don't give up, invest. And all of those gains are up 90, 70, 60% since the crash as well. So, disclaimer, As we've seen, this is for educational purposes only. I'm merely stating my own personal opinion. I'm not a licensed financial advisor. This class does not intend to be used as a complete source of information on any particular company or investing vehicle. Every investment decision is your decision. Okay, you guys have seen this. What I share here are examples. I can't tell you what to buy and sell. I'm just sharing with you ideas so you can research on your own, and all that good stuff. Okay, so there were, in the end, 154 registrants for this class, and I guess we got to 100 in the. I wonder if the meeting actually is capped at 100. I see there's 100 people. It might be that there only 100 can be let in. Maybe that's why people can't get in.
Yeah, I think on the free Zoom, you're limited to 100 per meeting.
Okay. Okay. I'm sorry, the people that came late. That explains why that's going on. Okay. So the main questions I got about how people were stuck was choosing a brokerage account, and then so what I'm going to do for that is I'm actually going to send an article and an extra resource after, because out of the 154 people, really only a little bit under 20% are dealing with this versus much bigger issues. I promise I've not forgotten you guys. I have something I'm going to send you that gives a breakdown as of a week ago, the best options for brokerage accounts, and I will help you also. But this is a much bigger question that applies to many more people here. And basically what it's saying is, decide what investments and stocks to buy, stay consistent, and also I have investments I feel they're random and want more strategic guidance, and the same kind of thing I'm investing but not getting the returns I want. The main question is what to buy. Because if you get super clear on what to buy and why you want to buy it, you will be consistent. You will believe, hey, this is going to go up. I believe in it. I'm going to want to do it. When you don't know what you want to buy and you don't believe in it, then all of a sudden your ability to execute changes. So let's answer the most difficult question for people. Okay. As an investor, what are the two things that I really want my portfolio to do? Who can call out what they think this could be? What do you want your portfolio to do?
Grow.
Great. Grow how much?
As much as possible.
Okay. As much as possible. Give
As
me a
much as possible
benchmark.
without too much risk.
Okay. Give me a benchmark of what we would say is a basis of what we want to get in the market.
At least the S&P index, at least that.
Okay. Okay. So great. I want my returns to at least match the market. Okay. Sounds pretty good. Sounds pretty reasonable. So the S&P we've seen, I guess this is slightly outdated because it's about 100% in the last 5 years. NASDAQ, basically 30%. Now Dow Jones, and another one, which I think a lot of you have introduced to, is the Bitcoin ETF IBIT. So again, this is up 950%. It's insane. I don't want this to be such a huge part of your portfolio, but this also can be one of those foundational pieces. Crypto, I think, especially with Donald Trump, is going to continue to go up. I think in the investing club, I said to buy it when it was the last buy was around 60, so it's up 50% in a few months from that. Okay, so we get that we want to at least reach the market. So if you are stuck and you're like, I just can't get started, just start with the market index. How much do I invest? To take it super simple, buy one share of one index if you're on a limited budget. When do I buy these? Monthly, yearly? If you don't know, just buy it the last day of the month. Again, this is if you are completely stuck, start with this kind of thing. Okay. Now, number two, where things are going to get interesting is I like to beat the market. Anyone want to share some ideas? I have a few ideas of my own of good ways to beat the market. Maybe there's new ideas I haven't thought of that could be helpful for the group. Anyone have thoughts?
I don't know if this is a new idea, but I tend to favor dividends, because if you can get something along the lines of a 5 or 6 or 7% dividend per year, add a little bit of growth to that, you're already beating the market.
Okay, Shlomi, nice to hear from you. It's been a while. Okay, dividends. Other thoughts from anyone?
Niche indexes, niche ETFs.
Okay, niche ETFs. Any one or two in particular that come to mind, just that could be worth looking into?
AI ETF.
Okay, I think that's not so niche anymore, but definitely that's a good potential one. Any other thoughts from anyone?
I think it's like, well, when you say I want to beat the market, what market are you talking about?
So if I'm in
And
technology, I want to beat the
there's a
NASDAQ.
market that will always beat another one.
Say again?
Is a market that will beat a different market.
Well, what I would say is
Like
that if I'm going to
Nasdaq
invest
will
in
be
tech,
the S&P.
but what I'm saying is if I want to invest in technology, I want those technology investments to beat the Nasdaq. If I'm going to buy non-tech companies, I want those to beat the S&P. Just as an example here of what's going on. Okay, so first thing I want to share, and this is a sort of an evolution of what's been going on in the market. So here I have two things. I have the Nasdaq and I have an equally weighted Nasdaq. There are two of them. I'll give you the tickers. You can see them and buy whichever one you want. Which one do you think would be a better investment? There's the NASDAQ QQQ, which is the top 100 companies in the NASDAQ that are weighted by market cap, roughly. Then there are the same 100 companies that are divided equally into 100 parts, and that's what that ETF takes up. Which do you think is done better?
Malcolm, can you explain that? You said it really fast.
Sure. What we're looking at on the stock graph is over a 5-year period, two different ETFs. One is the NASDAQ, and what I'm talking about specifically is QQQ, what we've talked about in the program. So in QQQ, there are 100 companies that are in that index that you buy, and they're weighted by the size of the company. So for example, NVIDIA is a bigger part of that makeup than like a Shopify, which is smaller. So there's that option, QQQ, and then there is an equally weighted version, which means there are the same 100 companies, but all of them are the exact same size in the makeup of the ETF. Which one do you think does better?
The weighted
Wait.
index.
Weighted.
So not the equally weighted. Sorry,
Not the equally
I'll
No.
make it okay. There's equally
I would
weighted
think that-
and not non-equally weighted. So equally or non-equally?
Non-equally weighted.
non-equally
Non-equal.
weighted.
Okay.
I would think
Okay.
I'll go
equally.
with the equally weighted
I
one.
would go with equally.
So we're going to see here that QQQ is at the top. We know this. And the equally weighted one actually is only returned about half of what QQQ has. You can see here's the yellow line. So it's like, okay, that's interesting. What that's implying is that the largest companies within these ETFs tend to do better. Usually more money flows towards the larger companies because they're safer and it creates a snowball effect. So it's like, okay, that's interesting to be aware of. Let's keep going. So some of you guys
The
have maybe have heard
Magnificent
of the
Seven.
Magnificent.
Why would you even think that the equal weighted one would do better?
What's that?
Doesn't make any sense. Why would you even think that the equal weighted one would do better?
Well, so it
Because-
exists.
It's giving
Because
more.
you-
It's giving higher percentage to
Because
the
when the
companies
large
that don't do
companies-
so well.
If anyone wants to answer, or
I would imagine in
Yeah.
an equally weighted, you have a good chance of there being more breakout companies. There's more growth in the smaller companies relative to the larger companies. There's a bigger chance of someone making it big.
okay, so that actually hits on an important point relating to this new strategy. So you have the Magnificent Seven. If you guys have not heard of them, they're a collection of these top companies. You can see all the tickers here. So on one hand of a spectrum, we can say you can have an equally weighted version of the NASDAQ. You can have a non-equally weighted, or you could be very heavy on the biggest companies. Now there's an ETF, there's been for a while, of the Magnificent Seven. Here's how it's done compared to the NASDAQ in the last year. Is it better or not?
No.
It is better.
It's
Not
almost
better.
It is
double.
better, the round hill one.
Better.
39. Yeah.
So, okay,
Nearly double.
interesting. We're starting to see actually a concept of how money flows into less risky big assets, at least in this example. And also for anyone that says to me, I only have $50 to start investing with, something in that ballpark, you're going to see this, you're going to see other ones that also you can buy for very low amounts. So if you're like, look, I'm priced out of the market. No, you're not priced out of the market. Just don't go out to dinner one night in Israel, which costs $50 usually at minimum, and you can start to have this. So equally weighted versus size weighted, I'll say market cap weighted. Here is a similar one with the S&P. So here is the S&P 500 that's weighted by market cap, so the large companies are bigger, and here's an equally weighted one. Are we seeing a trend as well in terms of the returns? Which one's done better? The
Size
non-weighted,
weighted.
The size weighted.
the one that's weighted by market cap. So the equally weighted one we see here has done worse. So again, the flip of this is that let me even take one more example, and then we're gonna fine tune this idea is QQQJ. That is the next. So QQQ represents the NASDAQ, the top 100 companies. QQQJ represents company 101 to 200. So it's these smaller tech companies which you think, well, maybe these small companies can break out. But you see, on average, again, has not been around as long as QQQ, so it's not a perfectly fair comparison, but you can see it still has done significantly worse. So, as a strategy, this idea that we have in our head about, high risk, high reward is actually less what we're really seeing in the market where money just keeps flowing to less risky assets. Another example of this is, with Bitcoin. So crypto, what you can often find, it's not perfectly the same, but in many ways it is similar. When the like Bitcoin is at an all-time high, now it's dropped, maybe it's like 90,000, had sort of a bad few days with a hack or whatever, maybe it's in the mid 80s. Again, let's say it's around 100,000 because it will go back to 100,000 with time. You've got that, but you don't have any of the smaller coins. These are the largest coins here by market cap size. So Bitcoin is 1.7 trillion. This is 287 billion. You can see these are the largest cryptocurrencies. When Bitcoin shot up, these other ones didn't make all new highs. They did not shoot up nearly as much as Bitcoin did on average. Some were breakouts, but again, they were few and far between. And when Bitcoin drops, usually these smaller coins drop much more in comparison. So if Bitcoin drops 5%, then usually Ethereum might drop 7, 8, 10%. Not all of the time, but as a general trend, you would often see as the price went down, the smaller ones the price would get ground down even more. So we're seeing even in these sort of volatile, risky environments like crypto, the same kinds of things apply. Money keeps flowing to where it feels safe. And if you think about like why that would be, if you are a money manager and you are managing $15 billion, is your goal going to be to put money in the riskiest assets? Or is it going to be to put where you think all of your friends are putting money in, so your fund performs fairly similar to them or hopefully a little bit better? Which do you think would be the mindset? Go risky or go big where everyone's putting their money?
Go big.
Slow and steady.
That kind of thing.
Go
But
with the winning
it's
horse.
not even slow and steady. What we see is that it's actually fast and outperforms. So it's a bit of a mindset shift.
Yeah.
Again, think about this. A lot of these money managers, they're conservative people. They can't risk all kinds of things. So even as we see this, we think high risk, high return. That's not actually how the game is being played. We're seeing through the data. And also you think psychologically, that's all they're trying to do is figure out how can I stay the same as the market? How can I do what my friends are doing at the other investment houses? And how can I make sure I don't lose money? And that mainly goes to funneling money in to where money is already going. So that was concept one, and I will send you guys in a second. I'll show you. I'll send you the tickers for like the different. There's some. I want to send you a particular one for the Magnificent Seven and these other ones. But as a concept, a new concept about where money is flowing, actually we're seeing the most money going to the biggest players in the market, and there are ETFs that will cover us in those situations that are outperforming the Nasdaq. Nice, right?
Can I ask you a question, Malcolm?
What's that?
If I don't have the ETF, the Magnificent Seven ETF, but I have 6 out of the 7 single stock shares from from the Magnificent Seven, what would you suggest? Just buy the 7th one?
I would suggest you just deal with the Magnificent Seven because what it will do is it will weight them based on the ones that are the size of them. So okay, to answer that question with a little bit additional nuance, I would not be selling what you have now. You'll pay taxes, you don't need to do that. For additional investments I would put them in that because the fund gets reallocated based on the size that you will not have to do that. Okay, we don't want just one strategy. Let's have another one, maybe even a bonus one as well. Another thing, which again, I'm not going to talk that much about, and I'm going to talk about it more in the investing club that's coming up, are leveraged funds. So I might have briefly talked about these before, but again, These basically 3x your gains and your losses. So in this case, you have the NASDAQ, which is here, and then you have the leverage, the 3x version. It doesn't end up being exactly 3x because there are some fees associated with it. But if in general the stock market is going up and you believe in it, this is something that again can take your gains and it can magnify it. We can see it's a lot more volatile, but that's the nature of what it is. But again, it's tied to the NASDAQ. So if the NASDAQ over time goes up, this will also go up, but it will go up in a magnified way. Again, if you have less than $100, you're not priced out of this. This costs less than QQQ or QQQM, which I think is now like $200. So you're like, okay, now I'm starting to see more options. There's the same kind of one with the S&P. So you have the S&P, the regular, then you have the leveraged one, which again, it's not a full 3, it's 2.5, but you can see the same kind of thing. Be aware that although this doesn't look so bad here, when it's sold off, it does sell off a lot, but then when it goes up, it also goes up a lot. So we need to talk about how much of your portfolio you want that to be, but here's another option in your portfolio that's tied to the market index, but does better than them.
Malcolm,
Yeah.
are those funds suggested as you buy them and keep them, or in times of volatility or in times of time when you think it's going to go up and down that you are purchasing them for the short term?
So it depends a bit on your situation. If you need the money soon, definitely these should not be because of the volatility. I would not consider having these. These sometimes I say for someone that has a smaller portfolio amount, but they can go for a longer time. This can make sense. I have, for example, in my son's portfolio, I have some of the leveraged QQQ because I'm like he has plenty of time for that to grow. So you want to have time. And you don't want it to be a huge amount, but again, you can see what it can do. So that's kind of a little bit. If you need it soon, have small amounts in it. And also as a general thing that I always kind of recommend, don't take a bunch of money, put it in, put a little bit, see if it works. Get a feel for it, see that's helpful, and then you can decide about adding to it versus I'm not saying you are, but sometimes people have like a binary idea. Yes, with everything or no completely. Experiment. Just try a little bit.
Malcolm, when you talk about time, is there like a duration that you're speaking of when you say if you have time? Is that like 5 years, 10 years? Is there like a,
Nina, do I have to turn off annotations? In my team programs, I have to turn off annotations because art is being made. But hold on one second. Let me just do that. I assume it's unintentional. Oops, hold on. And I'll answer your question in just one second, Jenny. Hold on. Okay. You asked about time frame. So let me ask this question back to the group because I think someone in this group knows the answer. What is a time frame that gives you sort of a long enough duration where things aren't risky? Who has an idea of what that would be? What amount of time? I'll give a hint. It's based on stock market crashes because we want to protect ourselves. If we buy a bunch of stuff and tomorrow it crashes, we have an idea of how long the average stock market crash lasts, and we want to make sure we have enough time for that crash to happen and for it to recover. So usually what I say to people is you want at least a year and a half, ideally two. The average stock market crash is a year and a half. Some are longer, some are shorter. But with 2 years, you have a bit of a buffer. And ideally, if you're investing when the market's crashing, as we did a lot before, buying when it's crashing also is a huge opportunity to make money. But that's sort of the time duration, I would say. If you have less, 1 year, then you want to do things that are less risky. And I'm actually going to show you one right now that is less risky, but does better than the S&P. But did that help, Jenny?
yes, that's perfect. I was assuming that you meant a lot longer, so that's good to know.
Okay. Strategy number 3. So in the investing club, usually what we're doing is we're buying market indexes, then we're trying to identify high potential growth industries. It's called out earlier. AI is one that we bought a little bit ago. Crypto was another one. There's many others. Also, indexes of industries that are good but are currently down. Remember, there was the banking scare that happened maybe a year and a half ago where we bought the banking index. It shot back up after. Healthcare was great. It had a bad year now, so now it's also lined up to be good. So as a strategy, we have the market indexes. We have things that magnify the market indexes that we just talked about. And now we also have how the methodology of how we're trying to choose some industry ETFs that outperform the market. So the new concept I want to share with you is related a little bit to what I shared before, but it's about momentum. Identifying different ETFs and indexes that where money is actively flowing in. Because as an investor, all I'm really trying to at the end of the day is say, I think that the biotech industry is going to boom, so I'm going to buy an ETF of the biotech industry before the boom happens. I'm just trying to find where the momentum is going to. Now, you might say, I have no idea where the momentum is going to. This strategy is a change because all of a sudden, what we're doing is we can also find ones where the momentum is. So, for example, and again, I'll share with you the tickers. If you're like, where are the tickers? I'll send them just to you in a minute. There are momentum ETFs. What they do is that they're based on market indexes. So you have the S&P right here. This is a yellow one. Then you have the momentum one, which also is looking for the companies that are breaking out and emerging in this one, and it's more heavily weighted towards them. So this has the nice movements that are similar to the S&P, but it has a 50% higher return. Also, it's $100. So if we're saying I have no money to invest, actually, that's pretty good. The thing I want to call out about this one that is very important to note is that if I compare this to the NASDAQ, I throw the NASDAQ in here as well. So the NASDAQ is done basically the same, 152. But the NASDAQ, which is this upper blue line, is much more volatile. It shot up more, it shot down much more than it shot up. Versus if we look here, when the market crashed, this one, because it sells off holdings that are losing momentum, actually protects much more than the NASDAQ did. But at the same time, then it starts to buy the ones that are growing quickly. So what this fills the gap in a portfolio, and also Jenny, you just asked this question, I sort of alluded to it. I was like, if you need money sooner and you don't want something like a leveraged fund, which I get you probably don't want to, here's an example of one that has momentum built in, but also has a safety net of it sells holdings that are not doing well. So it does better than the S&P, but it's only as volatile as it versus it does as well as the NASDAQ, but it's less volatile, which is very helpful if you're short-term investing. Does that make sense? Okay.
It makes sense, but is that a fair comparison? A momentum S&P ETF versus a standard weighted NASDAQ ETF?
No. So what I'm saying here, my comparison is I'm compared to the S&P. I'm saying, again, compared to the S&P, there's other options that will do better than it. But I'm just showing you as well, it has one benefit that also is superior to the NASDAQ in the fact that the NASDAQ has similar returns, but the NASDAQ is more volatile. So I bring this
I
up simply
see.
to share with people that have got portfolios that they're like, look, I'm near retirement or I need the money to buy a house. I want it to grow, but I want to keep my money safe. This grows similar to the NASDAQ, but is much less volatile. The S&P, when the market crashed, sold off like 25%. The NASDAQ sold off 35%. So again, upside without as much downside. Okay. So our
One quick
checklist.
question, Malcolm, if I
What's
can.
the ticker? What's the ticker of that ETF?
I'll send you guys the tickers in just a second. What I'm going to do is I'm going to send on WhatsApp the tickers where it's just more organized than me just putting it here and people miss them and stuff like that. And I promise you, I'll send you every ticker I mentioned. I'm not keeping stuff from you guys. Was there another
Malcolm,
question?
one quick question, if I may. Yeah.
Sure.
Thank you. Just if when you were giving us the class, you talked about the ratio of what we're supposed to have, roughly speaking, in our portfolio. And if I remember correctly, it was roughly 85% in ETFs, at least at the beginning when we're building up our portfolio. When we're talking about now momentum ETFs or leveraged ETFs, are we including that in the 85% or is that going to be in the 15%?
So I would say that these ones should be in the smaller percent.
Okay, thanks.
Yeah. Yeah. Okay, so getting unstuck checklist. Okay, step one. Here's just a recap of what we said, just so we get it one more time. Get market indexes, 20 to 40%. That's what they've returned per year. Not too shabby. Just don't stay stuck. If you just do this, this is how they've done. It's not my opinion. Look it up. You guys can see these are awesome returns. It's not worth staying stuck and missing out on these returns. Step two, get returns that beat the market. What I shared with you, on average is done 30 to 60% per year for like the last 5 years. The Magnificent Seven, I'll show you the ATS for that. The leverage QQQ and the S&P, and then also the momentum ETFs. Now, again, there is nuance of how much you want in your portfolio and how you want to spread it with timing. But again, I have one session with you guys, and I just want to give you new ideas that are practical. You can be like, okay, now I can at least look at some new stuff and get ideas that really can do very well. So yes. The remainder of getting unstuck. You need to know what you want to buy. Okay, so again, start with step one if you have got no idea. Step two can help many people that already been in the club and all this kind of stuff and have been investing for a while. Next, how much do I have to invest? So many of you have this already, but for those that are stuck, I just want you to write in the chat exactly how much in dollars you're going to invest. That's a joke. You do not need to write in dollars how much you're going to invest. I think legally I'd be in a lot of trouble. But I want you to write in the chat, think right now, because a lot of where people get stuck is they just don't have clarity on a few things. How much on a monthly basis you want to invest. When you have that number, just write in the chat, done. Just so I can see, I want to make sure that people are stuck. Okay, so someone put in real numbers, great. Rob, nice to see you. It's been a while there. Okay, done. Keep rolling. Keep this going. If you've got it already, that's fine. If it's not exact, still just you need to come up with some kind of rough estimate so you don't come out of here and you're just like, I'm in some kind of gray zone. I don't even know how much I want to invest, even if it's wrong. Okay, I see a few more title numbers. That's cool. Okay, Chaim, Jonty, Talia, Debbie, Vita. Wow, so many familiar names here. It's awesome. Some of you guys I haven't worked together in like 2 or 3 years, and some of you it's been I've been working the whole time together with. Okay, awesome. I see there. Okay, how much you have to invest? Great. Next, what should I buy? So, I think was it Shlomi that asked this? I couldn't hear from the voice exactly. If you're not sure what to buy, and again, you're stuck. But for now, if you're totally stuck, buy 65% in the market indexes. Again, buy the Nasdaq, buy the S&P, buy a bit of Bitcoin, and then 35% can go into these other ones that I talked about. If you're not stuck, you can just add these into your portfolio as needed. But I don't want you to come out of this and you're like, okay, I got some ideas, but like it's still vague. If you're like, I don't know what to do tomorrow, okay, start with just a market index. And if you want to get more complicated and sophisticated than that, then choose one other one that I said and have some kind of rough split like this. Do not make your portfolio 80% leveraged funds, 80% Bitcoin, any of that stuff. Start with the S&P, start with the Nasdaq, and then again, you can add as a smaller percentage the Magnificent Seven, some of the other stuff, that kind of thing. When do I buy these? Monthly, yearly, what's the plan? Again, what we will go through more is when the RSI is low, when we're at support with MACD, when the best time is to buy it. But if you're like, I just need something simple, I am stuck, just buy at the end, the last day of the month. Just buy it. Keep it simple. That's totally fine. If the market's up and you buy and it drops, great. Next month you're going to buy again. It doesn't matter. So if you need to and you're like, I don't want to overthink it, last of the month, just put the money in. And if you have a bit more time, then you can watch for, if the market goes down, the RSI is low, that kind of stuff, and then buy a little bit more during those times. And another piece, which I have some video on, I'm trying to think if I remember where it is. If you can automate sending money from your bank to your investing account. It will not invest it for you automatically, but if like for my youngest, not my youngest, my 9-year-old son, another one, I have $100 that comes every month from my bank straight to my Fidelity account into his account, into his child's account. It's there. I put in the market. So again, if you're able to automate it, we'll just take one more step out because coming from here, we want to be like, okay, I know I have $100, $500, $20 million to invest each month. I know it. I know what I want to buy, and I know also when I'm going to buy, so that a lot of these pieces are done for you, and you get unstuck. One thing that's going to be a change as well in the investing club is that I'm also going to send a reminder to people near the end of the month if they did not buy some of the things that already were mentioned, just to buy now. So sometimes just that little reminder can help accountability. Okay, and I will also, for anyone that does not have a brokerage account, I will send a guide. I'm not forgotten you. I know that people do need help with that. I'm going to send something to help you along with this article so that that gap will be filled because it's an important one. Okay, so there's still a little bit to go. I'm at 45 minutes, so okay. I'm at the time limit roughly, but I guess I made this maybe an hour. I made a lot of promises about what you'll learn, how to get unstuck, how to increase your gains, new investing strategies from last year that can apply to you that I believe no one in my programs has heard before. That I think can be very good additions to your portfolio. Also, how much will the stock market make you in 2025? And what is the deal with this club and the super program? Is it good? Is it a ripoff? What is it? I'm going to talk about it because it's new. So now to get the tickers, basically take out your phone. I don't want to spam all of my WhatsApp groups with a million things. Take out your phone, point the camera at this group, and then you can enter in the WhatsApp group. This is how I'm going to send the tickers that I showed today. This is also I'm going to send the article. If you cannot join this group, I will send, or you can't, your camera won't work. I'm going to send in the chat the link to the WhatsApp group. And I'm going to leave this open for a minute. Join this group because this is how I'm going to send you stuff. We got 100 people here. We've got almost, okay, I'm just going to give another minute or two so people can still get in. Again, if you're not sure, open your phone. If someone can help me and do me a favor, if you go into this group and you go share link and you put that link in the chat window. So anyone whose phone doesn't work or whatever, they can see that link in the Zoom chat and they can join that way. Because I know sometimes people have got some issues with that. Let me try and do that for a second. Up here.
You took away the URL.
Yeah, I'm gonna hold on just one second. I'm going to put it back. Invite by
That's
group
in the
link.
chat here.
Here we go. Now I'm putting it into the chat. Someone put it in the chat. Thank you, Shlomi.
It's in the
Appreciate
Zoom
it.
chat.
Yeah, great. So it's there. Let me give a minute so people can get in, and then I will be able to send you guys all the stuff. Okay, so we've got almost most of the members in. If you want it, go in there. It will help you. You can then use these tickers right away. Okay, so now I'm going to move away from the screen because I want to share with you the last stuff. And if you need to get into the WhatsApp, again, use in the chat for here. It has the link. Okay, so how much can the stock market actually earn you in 2025? How much can it earn? Surprise, surprise, I cannot predict how the stock market will go. We've looked at how it's done historically. I just want you to understand the explosive potential in a little bit more detail because sometimes people just need to see again how much it can really make them before they will take action. They're like, I can't not do this because it's painful to miss out on all of these gains. So what I want to show you is a scenario. This is extreme, but it's just for good to see. Hold on, you guys, you can all see my screen, right? Just want to confirm you can still see my screen,
Yes.
right? I'm on a
Yes.
website.
Yes.
Okay, great. So let's say I put $1,000 into the stock market, right? And I invest in the NASDAQ. The NASDAQ on average returns 15% a year. We saw it's done a lot more recently, but let's say it's 15%, which is the average. If I leave this and it's compounded annually and I don't put any more money in, how much do you think this $1,000 is going to turn into 50 years from now? Just to get an idea, I put in $1,000. I don't add anything, and it goes up at the average rate of return. The NASDAQ goes up. How much do you think this is going to grow to in 50 years?
50 years?
Yeah,
50?
yeah,
That's
50.
a long time. 50
It's okay.
years.
I
5
promise you,
million.
I promise you, you do not have to wait 50 years. I just want to show you one example just to understand the power. How much do you think
Three
this will turn
million.
into?
3
A
million.
thousand bucks in
5
one shot.
million.
What is
5
that?
million.
3
5
million.
million? Any other thoughts?
3 million.
140,000.
3 million, 4 million.
it turns into over $1 million.
Millions.
So
That's without adding anything more, just putting
without
it in.
adding anything more, okay, just to understand what the market can do for you. You might say, I don't have 50 years. I totally get that. Let's say you have, I'm just going to say 15 years. You have $1,000. I'll put in, so you have 3,000, and you contribute on an annual basis $500. Okay? So we can see here how it can grow if you actually put in, no, not $500. Let's say you put in monthly $500. All of a sudden, do that. Let me make this I'll do here. See 4,000, how much changes. You can see that again, in not so much time, how this 3,000, again, you're putting a little bit, but it goes up like 100 times roughly in 15 years.
6,000. 6,000.
What's that?
It's 6,000 a year.
Okay. Fair enough. I'm going to send you this as well. So all of you could put in your information. If you're like, look, I have $10,000 and I'm going to put into things like what we recommend here, and it's going to go 20% a year. Sorry, I'm going to grow it for 15, and it's going to grow 20% a year. Okay. You can see how that 5% difference more than doubles the money. So I'm going to send you also this link to here so you can put in your own numbers and see exactly what it can do. It should shock you. And this is just very basic investing. So in this example, we saw 1,000 turns into 1 million. Hopefully that's enough to think, you know what, I want to try again if I'm stuck or if I haven't started. And you can say, I only have 5 years left or 10 years left. Probably you're going to put in more money. You will get very surprising results. Okay. Last thing I want to share with you relates to the super program and just data that I think will help a lot of people understand what I've seen that's success. So I've worked with over 1,000 people, I think quite a bit more, and many I've worked with very closely. Here is just the data on the patterns I've seen of the people that make the most money. So one is we started to create this today. We didn't do the whole thing. I mean, I had a one session with 100 people. You have a clear investing plan. There's no ambiguity of how much am I going to invest? Wait, what am I going to buy? When am I going to buy it? And it's written down. So you have a record of it because it just takes the thinking and the guesswork out of it. The plan is crucial to set yourself for long term because when you won't get confused, you'll come back to it. That's what I've seen is very helpful. Two is accountability. A big challenge people have is they start and then they get busy. No one's checking in with them. All of a sudden they stop and they feel guilty and then they miss something and now the market's up and is it down? Should I go? So they have some person that acts that's checking in with them. That's their partner to help them stick with it. And the third is the market does get nasty. Right now the market's selling off. But then you actually have support when it goes down and encouragement to keep going and more importantly to buy when the market's low because anyone that was in the investing club with me that bought when the market was low and I was saying it was painful to be in that now it's up dramatically. So these three things after working with tons and tons of people are the things that I see that separate out where the people start to make the most money and really do well. They turn it into a life habit. So when I've had classes again, I had classes that started at this point in 2023 in later 2024, the market, just the NASDAQ, if you were just investing basically during those times, here's how much the market has been able to do for you. So again, all of these teens in my programs have made money because the market goes up much more than it goes down. I see examples of like people making crazy gains, and this person only started investing 2 years ago. It's not like some kind of seasoned investor. They were just in it, they invested, they did well. And I will tell you one other thing. You guys, many of you know that when I started investing in 2008, I lost 75% of the money that I had investing. I bought banking stocks, they crashed, it was traumatic. When I finally started to make money, I made basically $1,200 the first year in the stock market. That's what my gain was. This year, I made $140,000 in the stock market. Okay? It started with 1,200. It was working. I said, I want to do this more. So even if you're like, I'm at the beginning of my journey, or how would I possibly earn what this person's earning? They did it faster than I did because they had better information. They weren't making all those mistakes that I did. But everyone starts somewhere. This is where I started. And it can get much higher than you might think. And lastly, with Trump and the debt ceiling and interest rates going down, this is a very positive time where there's good market potential. So the idea that all the gains are behind me, I've completely lost out, that mindset is what makes you continue to lose. The reason why I did this class was that I heard from many people, they're like, the market's up so much since I did your course, I just couldn't quite get started. And now I feel like maybe I missed out on everything and all that kind of stuff. You have not missed out. You still can do it. So what would I love to do to help? What we've gone through is knowledge. I hope I've given you very practical things. I will give you all of those tickers so you actually just have more real helpful information. What I want to help you with, which is where I see the difference, is implementation. Basically, getting faster results, making it easier, not losing as much money with mistakes, and make more money than you thought. So, for people that are totally new, I have my adult program. It's going to start in a little bit. I can share details for anyone that's interested, but I actually have something that I think is a little bit more interesting that could still actually be relevant, that's different than anything I've ever done before. So, the Investing Club 2.0. Okay, what is this? So, what it is, it's a 90-day program where I help you holding your hand to implement everything. Now, for anyone that's in the class that just finished with me, you guys have seen a little bit of this stuff, and I think many of you are in the club, but just for anyone that is not and wants to see what's going on. The goal is to help you turn this into a life skill and a habit and get actual wins in the market. Once you get wins, you trust the market, you never want to leave the market. Before you've gotten those wins, it's a lot easier to just stop doing it because you're like, I haven't seen it make me money. So what I do now that's different is we create a custom plan, you and me, one-on-one, a one-year plan. This is different than other plans I've made with people in the past. So we have everything down on paper. It's crystal clear with your goals, your timelines, and exactly what you want to be buying. The second thing is it's basically with the accountability. I have an example portfolio where we're buying things on a regular basis. I cannot tell you what to buy and sell, but I show you what's in this example portfolio. I text you in real time, hey, I'm adding Bitcoin right now. Hey, I'm adding right now the Magnificent Seven. So you get encouragement. And I will also be saying, hey, if you haven't invested at the end of the month, just put money in. Message me back that you've put money in so I know you are moving forward because accountability I've seen is huge. And just a few examples. Also, I share stock recommendations. I think some of the last ones from the club. Apple is up 45% since I recommended it. Tesla is up 90% since I recommended the club. So it's not just indexes, it's also stocks too. And I do workshops, which help to give that guidance when the market's down and things like that. Now, there's something that I have never done before. I just offered it for the first time recently. I don't know whether I should offer it. It seems to me crazy to actually offer this, but you know what? I'm offering it. So what that is that I actually have a $700 complete course that none of you, maybe a few of you have seen, but basically just about no one has seen it. There are 15 extra classes in it. This course costs $700. This is the most comprehensive course with all the information that I have, with again 15 new classes beyond the ones that are in the adult program already. So here's just a snapshot of a few of the classes that are in here, just to see it's stuff that it's new, it's amazing new strategies, how to deal with the market, all of the stuff in my most comprehensive program ever. So what I'm planning to do is that I am going to throw that in for free into the investing club. If you join, you can have access. Instead of these workshops, I'm expanding this, and it's going to be the $700 course you get access to for free. So the goal for this, help you stay unstuck. These are the outcomes I want. We spend 3 months in the market together investing, so you get more experience, you get new ideas, and you have an accountability partner, so you actually execute and turn this into a habit for life. It includes consultation, which I only charge $200 for. It includes a $700 course as well. And my wife asked me why the price is what it is, but here's what it is. It's 350 shekels plus VAT per month, which is basically $100. And it lasts for 3 months. You can extend it if you want, but that's what the program is going to include. All of this for that. Um, there are limited spots, and as you guys know, I only open the club maybe once every 6 months or so, so it's not so accessible. But for anyone that wants to join, this is what it's going to be based on what's been basically help people make the most money of the thousands of people that I've worked with. Um, so for anyone that's interested and excited. I've been working on this and I really thought about the feedback I got from all kinds of people, people that are at retirement age, people that are younger with kids that are saving, but they need to buy a house soon, people that are just starting out after the army, people that are abroad, all of that kind of stuff. What worked for them and how can I put this together in a better package so that more people will succeed in a deeper level? So that is the program for today. If you want to get in the group or if you want to join the investment club, please message me so I know because I will hold a spot for you. And I will also take questions on anything anyone has. Questions, anyone?
How much did you say the per month is the club?
Here's the club, 350 shekel plus VAT for per month. It's 3 months. And also, if people that want, they can extend into the club for longer. And it comes with a consultation and also the $700 course that I don't know why that's part of it, but you know what? It's part of it.
I have a question.
Yeah, sure.
I was just wondering how much investors that work for these giant companies, how much do they usually make per year? Because I get this kind of idea that maybe they make like 80, 90, 100% a year, but if they most of them don't beat the market, which is what you usually say, like most day traders or I don't know, like all these traders that don't beat the market. So like even if they're making 20% a year, you always talk about the stock boss, right? Make this your job, don't have to work. I don't like a lot of big sentences, but I guess I'm trying to ask is how do you really make that work? I mean, unless you're starting with millions, and then I mean, yeah, if I put like 10 million in the stock market and that's making me 10% a year, a million a year, I can live off of that. That's fine. But if I'm starting with much lower numbers,
Mm.
$10,000, $20,000, I mean, how it sounds like even, yeah, maybe when I retire, I'll have a nice chunk of money to retire with, but that's very, very slow money. Now, it's not making money, but that's not the stock, but like that's not making money. I can't live off of that. And even
Okay,
if I was
so
able to make numbers, like, am I always taking out to
let me try to answer the question because there's a few pieces to this question. First of all, we have to be reasonable about what we can expect the stock market to do for us. When I say reasonable, if I buy a house and I say, I expect that next year the house price will double, that's not, maybe in some insane housing market that might happen. That's not the norm. And if I'm expecting that, I'm relying on it much too heavily. I'm not giving it a realistic assessment based on how much housing prices change. What we can do is we can say the stock market on average goes up between 10 to 20% if we look at the Nasdaq and the S&P in the last couple of years, or we can be a bit more conservative and say it's between 15, which is the Nasdaq historical average, and 10, which is the S&P, and it's a blended amount. Again, we talk about practical things to make it higher. So what you do is you take that and you apply it to however much money you have. If you have $1 million, that means 150 to $200,000. If you have 100,000, that's 15 to 20,000. If you have $1,000, then it's basically 150 to $200. Everyone is on a path at different places. I mentioned to you before, my first year when I started making money and I lost money my first few years, I made 1,200. But all of a sudden, a light bulb went off where I'm like, this stock market can actually make me money. And then instead of spending money in kind of unnecessary things, I tried to funnel as much of it in. And it basically took me, I think, maybe whether it's 8 or 10 years where the stock market, I went from nothing to it earning more than my salary at work, and then the stock market became my boss. So that's the flow. But at the same time, I'll tell you, no one is going to be upset when all of a sudden the stock market for the first time pays for your rent or a vacation or a car. It might not be enough to say, hey, it's not paying for me to stop working, but it's not a realistic expectation of any kind of thing to say, how in one year can it do this? So to ground what I was saying, one aspect is be aware of how the stock market historically performs and apply it to whatever your situation is. What you will find often is the stock market does better than you think. And then from there, realize it's a journey. If I were here and I said I went from investing in the stock market to 1 year later not working, I think I don't know. I would not trust me necessarily. It's a process, but as you're making more money from the stock market, you will enjoy the fact that it's growing for you. So that's a few ideas for it. People ask me sort of like, how do I live off the stock market? What do I do? That's not what I do. Different people use it differently, but my particular situation is the stock market was earning more than my salary, than more than my wife's salary. When that happened, instead of working full time in tech, I quit. She went to part time. Then I started working part-time, basically teaching courses on the stock market. So what happened was that instead of us needing to earn X amount of money to cover our cost of living and X amount of money to also save for the future, when the stock market started to grow big enough, all of a sudden it started to grow more than the amount I would put in. And then I said, I don't need to earn that much. I just need to cover my cost of living and then transition from full-time to part-time along with her. That was sort of the flow versus I'm never taking money out of the
So
market.
you're not constantly pulling out, putting in, pulling out, putting in.
No, but people that are near to retirement and things like that might say, I want to. And in that case, there's dividends. We've talked before about JEPI or JEPQ. That's the NASDAQ version of JEPI that does like even better in some cases. Those can pay out money regularly. They pay a dividend every single month. So again, it's just another strategy based on your needs.
Actually, Malcolm, right around that, the idea of the dividends, there are actually a few ETFs that are matched both to the S&P and to the NASDAQ that return roughly a between 12 and 14% monthly dividend distribution, SPYI and QQQI. Now, obviously, their gains are somewhat capped, but they do pay out a monthly distribution that is matched to the S&P and the NASDAQ. I've sent you the tickers as well to take a look at.
Okay,
I've been
great.
doing that for a while, and it's also tax advantaged, so it's also really nice.
I'm jotting down here as well. You said SPI and QQQI, yeah?
SPYI,
Ah,
QQQI. I've also sent you both of those tickers in WhatsApp. You can take a look at them later, and if you would like to share them with everyone, I'll let you make that judgment call.
okay. Okay, great. Great. That's an awesome idea, and that knowledge is very helpful. Um,
I've also personally, I found that getting dividends every month, just keeps me motivated to keep investing and keep putting money in. It's small amounts, a few bucks here, a few bucks there. But when you actually see the money, not just, numbers on a chart growing, you're actually seeing money coming back into your pocket from the market. Yes, you're paying tax on it, which isn't perfect, but it keeps you motivated in the mindset you see money coming in and not just numbers going up.
yeah, absolutely. And also for people that practically want that money to cover life expenses, that's also very helpful to have too.
Malcolm.
Malcolm, when you do have a dividend stock, if that stock immediately gets reinvested by your brokerage, or let's say I invest over Robinhood, do you end up paying taxes on that until you remove it from Robinhood? Do you know?
So when dividends are paid out, they are taxed. That's just a reality. The other thing is you put them into what's known as a DRIP, dividend reinvestment plan, where we'll buy a fraction of the share that is the dividend amount. So if I get dividend from AT&T and it gives me let's say a 7% dividend, it will use that money that comes in to buy part of AT&T stock. Still, when that happens, I would need to check whether the DRIP is actually taxed because the money is invested right away. Definitely when it
Right.
comes out as a dividend in cash, it is taxed.
I
Right.
think
But
I
like
I think I know the answer to that actually.
Sure.
You when you file your taxes, you are supposed to declare that as income, even if it is being reinvested.
Mm.
But I don't believe that any Israeli platform lets you reinvest the dividends automatically. I
But
could be wrong
Robinhood, I
about that.
believe, should.
yeah,
Yeah, the
Robinhood's
American
not
platforms
Israeli.
do. Robinhood does. Vanguard does. The Israeli platforms, I believe there's no mechanism to do that, so you have to reinvest them manually. So they get paid out into your brokerage account, you pay tax on them, and then you can reinvest them. So it's a lot less efficient. There's no dividend snowball. It doesn't really work like it does in the American brokerages. But in the American brokerages, I understand that that's how it works.
Yeah, and that was also my understanding is that even when it gets reinvested, still the dividend is taxable when you file taxes.
Thanks.
Okay, maybe I says I'm just looking at the faces here, the many familiar faces. Any other questions?
Yes,
Yeah,
Malcolm.
Malcolm, I have.
Malcolm,
Yeah.
for non-US citizens, do you have equivalents in non-US based indexes, etc.?
Maury, I think we were talking about the Irish domicile when we had a chat
Right,
recently.
right. So for
Um, so if anyone's looking also for Irish domiciled ETFs, I can share a few, so ping me on that. For these specific ones, I haven't looked, I don't know. So let me check on that.
Malcolm, I'm
Yeah.
not 100% clear. Hey,
Sorry.
I'm not 100% clear now if I'm supposed to be holding on to the ETF indefinitely or supposed to be selling it at some point because the dividends don't pay that much, but people are making gains. So I'm assuming I'm supposed to be selling the ETF, but I don't know when that would be. It's just a little confusing to me.
Is there a particular one you're thinking about, or just like in general, or just to understand better like what?
Just in general, because I've been putting some money every month into the S&P 500, but I'm not sure what I'm supposed to do with it beyond that point.
What was the last part of the question? I heard the first, but not the last part.
I'm not sure what I'm supposed to do with it. I've been just putting in some money every month, but if I'm supposed to be selling at some point in order to make gains, like
In,
when
in
am I supposed
general,
to do that?
unless you need money to cover costs or things like that, my recommendation and the way most investors recommend is you want to just accumulate. So again, I think a lot of you have seen in the club, it was rare that we are selling stuff. It's more like, okay, we're putting into the Nasdaq, we're into the S&P, and then in a given month, there might be 3 or 4 different options of ETFs or some stocks, and we choose whichever one at that month looks like it's set up the best to grow. In some cases, if you don't believe in the company or the ETF, you can sell it. But in general, unless you need the money, my recommendation is just continue to add to your portfolio, because the market does go up over time in general. Not every industry will, but as a concept versus trying to buy and sell, and you have the taxation issue and other kinds of stuff. On one foot, if you want to sell, I would try and wait. I would not sell when the RSI is low. I'd wait and give it a chance. Hopefully, RSI is high, and that kind of thing at support or resistance.
So basically,
I wanted to ask.
if I would, it would be for a purchase. If I would want to use the money for something, that was when I would sell.
Yes. And then there is nuance. I don't think I can answer probably right now, but like on how you choose which
Fine.
ones to sell, it's a combination of which ones over the last few years have done worse, like that have not actually overperformed versus ones you believe in and have more potential for growth, and then also whether ones are set up well or badly. If you have one that you don't believe in and it's actually at an RSI high, then let's get rid of that and hold on to stuff that you care about.
Okay, thanks.
Sure. It's actually like it's so interesting to me because I've done programs with teens lately and also as a television university, but like I love teaching adults because like you guys have got like different questions. You're into it. Like Shlomi, you're giving new suggestions. I learned from many of you guys. There's questions that are challenging. I'm like, it's it's just fun. It's been a while. Other questions?
I wanted to ask you what you think about XRP.
I keep getting asked about XRP. The thing I will say to begin with is this. If you don't have a crypto exchange account, there's no XRP ETF, so you cannot buy it unless you have a crypto account. If you do have a crypto account, what I would say is that it's similar to like the money sandwich. Have a majority be Bitcoin, have a little bit be the larger ones, whether it's Ethereum, XRP, Solana, as a piece of it. Solana, I've owned XRP back in like 2017. I actually owned it. It shot up, then it went down for a very long time. Now it's shot up again. Usually, when you buy things as they're shooting up, they often will cool off and go down for a while. So I don't necessarily recommend it. If anything, small amount and little bits at a time, not I'm going to buy a bunch because everyone's talking about XRP.
Thank you.
Sure.
What about the Israeli stock market?
The way that I think about the Israeli stock market, hey Maggie, is how is it done compared to the U.S. stock market? I know it's rallied lately, but in general, I just think about like over 5 years. It definitely has underperformed dramatically. So like if you want to have it as part of one of your ETFs, okay, but as an objective person, I'm not actively looking to invest in that because it just has not done as well. The situation here, fortunately, seems to be improving, but like there still is a lot of uncertainty where I think as an objective investor, do I think that this is the ideal market to invest in? There's question marks versus the major US indexes in comparison. And again, that concept of money goes where it's safe and where it's big often happens on a country level also.
Malcolm, I think also just as paying into an Israeli pension funds,
Mm,
I think by law, pension funds have to channel some portion of the money to the Israeli stock market.
mm.
So in that regard,
Yeah, you
we
have
already
exposure.
have money going in there, I think, whether we like it or
Thank
not.
you. That's good. Thank you. Good to know.
Malcolm, can you hear me?
Malcolm?
Yes, by the way,
Malcolm?
I see my mother. If anyone can spot her from she was in the last lesson, if you guys remember. She's there with
Those
the same
comic books
last
have
name
paid
that everyone
off.
sees. But
Malcolm?
yes.
Hi, I'm with my sister here. How are
Hey.
you?
Hi, how's it going? Nice to see you both.
So quick question. They're saying that there's going to be like major inflation in the United States. Like, how does that affect the stock market? Like, how do I
What
can't.
is the data actually showing about inflation? Inflation reading in January, does anyone know what it was in the US? Like what percent?
It's like right on target
4%?
or almost a target of 2 point something, I think.
I think it was 3%. When I
Okay.
look, I had a slide in here where I was going to talk about inflation. We have not seen inflation go up. There's always talk of a stock market crash, inflation going up. We don't have the data to actually show that's really happening. Inflation was down a bit more, it's maybe at like 2.4 at its lowest point a few months ago. It's at 3. That's not such a crazy level that I would not let fear of that happening stop you because I'm just not seeing enough evidence that it is, and maybe it shoots up, and then maybe also that makes the stock market down. So then you buy more when it's down, and then it recovers.
Right.
By recover, I mean the inflation goes down, and then you ride that up.
It's for long term mostly anyway, right? So,
Yeah, it's okay. I mean, again, what happened the last time inflation was up to the stock market?
what happened?
The stock market crashed. Was that a good time to buy?
Yes.
Yes.
Mm-hmm. Got it. So let's wait until there's a crash and then we'll buy it. Okay, got it.
No,
Thank
no,
you.
no, don't wait. Okay, you smiled and you laughed. I was like, I'm like, oh man.
Thank you.
Sure. Okay, I'll take one or two more questions here.
But Malcolm, why do you think that right now it seems like the prices are going down? What's causing that in terms of
I mean, what I look at is that in the app, okay, a stock market correction. That means this started actually getting to some of the content that's in the complete course, but it's still helpful to know. A stock market correction is when the stock market goes down 10%. That's like up to 10%. A stock market, I can't remember what the other word is, where it goes down 5%. Like in a given year, the stock market usually corrects down to 10% one time on average. It usually corrects down to down 5%, maybe like 3 or 4 times. These are normal movements in the stock market. The stock market was an all-time high, all-time high, all-time high, all-time high. Now it went down. Am I concerned about that? It's normal market movement. Is there a reason? Yes, there's always some reason. And then it recovers from that reason. So getting into this, talking about why did it specifically do that, I think gives it more weight and validity than saying this is normal market movement. It can't just be all-time highs all the time. And if it dropped, great. Buy it when stuff's a bit cheaper.
Malcolm, I have a question.
Sure. Hey.
Just your opinion on why, I don't know if it's true, but the media is full of Warren Buffett selling off. Why do you think that would be the case?
I did see an article about that, but I also remember an article about him selling off at other times during times when the market went up. So I would have to look and see what his reasoning is. I did see a headline or two about that, but again, I remember also during several times he was also had tons of cash, tens of billions of dollars in cash waiting to invest for opportunities where the market was just going up and he was just waiting. So even if we look at like what Jamie Dimon and Ray Dalio said in the beginning of the program about like doom and gloom and all this kind of stuff, I don't know what's in Warren Buffett's head. I'd have to go and see what he said, but it's not like he's always right. And it's not that he hasn't outperformed the NASDAQ. So for him being such a brilliant investor, you take Berkshire Hathaway and you compare that to the NASDAQ, he's not beating that. So I like him because we buy him in the investing club, but um even that, I remember even Elon Musk when the stock market was really crashing, he was like, "Oh, it's going to get so much worse. I have this very bad omen." Then the stock market got better, and you're like, "Oh, Elon Musk should know." So again, I'm just thinking about things that would prevent us from going in and investing and trying to make sure that's not the case. So I wouldn't be that concerned about it because again, put in a little bit consistently, if it goes down, okay.
Hey, Malcolm, I have a question.
Sure. Hey, Ali.
Hi. So I was wondering about like balancing on the one hand, investing consistently and continuing to put in every month, and on
Mm.
the other hand, like saving an amount on the side so that if there ever is a crash or anything like that, that you have a cash available to take advantage of opportunities when the market goes down. Um, so how do you balance on the one hand, like investing consistently, and on the other hand also, not like having something to take advantage of opportunities that come.
So two thoughts on this. Speaking of Warren Buffett, he's got a famous quote that more is lost waiting for the crash than in the crash itself. So I would be a bit careful about always kind of holding a bunch of cash on the side. The other thing is that historically what we see in stock markets is periods of contraction and expansion. What I mean by that is that the stock market often has a period of contraction, a crash that lasts for about 18 months, followed by 5 to 6 good years of expansion. I think there's many signs that we are in an expansion now. Not that there won't be corrections and pullbacks, but I don't think we're seeing any kind of serious threat that will be like, okay, there really actually is some fundamental issue that warrants really being out of the market. The way that I try and protect against that again, and again, it's not perfectly weighted because if you have hundreds of thousands of dollars in the market and it crashes and you're like, look, each month I'm going to invest another thousand, definitely is a much smaller amount that you have to invest than you have out. But again, if the market crashes and it takes 18 months, but you're sitting with cash on the side for a year or 2 years, the amount that would have lost, not gained by not being in there is less than if the market crashed and it was in there. Because usually what happens with a crash also is there's a run up, there's a frenzy. The stock market gets frothy, it goes up a bunch, and then it drops. So even when we look at crashes that have happened, like often it's a year or two before all of the crash only went back a year or two in history, not like back 10 years. Sometimes that happens very rarely. So that means, again, if that money is in and it goes up for a year or two and then a crash happens, usually you won't even end up losing money anyway. And if you can wait out the crash, then you totally don't lose money. It's a different answer than how to rebalance. That's a more complicated one, or it's just a different subject, but that's a little bit about money on the side, crashing, and what practically happens leading up to a crash where your money would increase in value anyway, because usually a crash happens because the market's really over inflated.
Malcolm, won't your approach
Thank
of
you.
putting
Sure.
Malcolm, won't your approach of putting in stops for your a certain part of the spicy part of your portfolio give you cash when the stocks go down?
Say just one more time. You were asking about which stocks
But
do I choose, or what's the
no, no,
question?
no, no. Remember, you've divided up the portfolio,
Yes. Yeah,
and
yeah.
there's about 30% which you call the spice,
Yes. Less.
and you've
It's 15% like the sauce.
okay. There's 50. Let's say 15% the
Yes.
source. You've also said that it's recommended you put in stops at 2 to 3% below the support.
Yeah.
So now, if the stocks go down, won't that 15% automatically revert to cash that you can then invest?
If all of them go down,
Yeah.
then they would be. But usually it's very rare that is the case. So it's more like what I would say is that if you're experiencing it and it actually happens, okay, then you might have a bit more cash in your account. It's rare that it does happen. Maybe you get stopped out of one position, but it's like, okay, so maybe like a certain amount has come back that's again a very small part of your portfolio. It's really very rare where I've seen you have several and they all drop and all of a sudden you have a bunch of cash back. So what I would say is that approach that when it happens, and it's not so often that you'd actually experience that in a meaningful way.
If the market went down, say 10, 20%,
Yes.
wouldn't that trigger the sale?
So it would, and that would mean the market's actually crashing. So that would
Yeah.
be kind of okay in that case, because then, when the market crashes on average, it goes down between 20 and 30%. So if it goes down, that means you saved a lot from the crash. I would not recommend getting out of market indexes, as we know. Those ones you just want to add and add and add. But for the individual stocks, it would then save you. But
And then
again,
that money could then be reinvested.
yeah, especially when you see the market's really stable and it's lower.
Would you recommend an American brokerage more than an Israeli brokerage for what reasons, or it doesn't really matter that much?
If you have the option of a US brokerage, I generally recommend them more.
What does it mean an option? Like
Some
just a
people
US
are
bank
in
account?
Israel, but they're not able to open a US brokerage. Sometimes they're asking for proof of ID and residence. Some will let you open, like I think E-Trade is one that's a little bit more flexible. If you have one open already, stick with it. If you are trying to open one and you can, great. Some of them, if you're doing it from abroad, or it's more challenging to do. If you go back to States, you just walk up to a branch in person, then it's actually then
You think it's worth the headache? Are there enough perks in the American brokerages that it's worth it to go,
are you
you
within
know,
10 years of Aliyah or no?
yeah, past 10 years.
Oh, if you're past 10 years, then just get an Israeli one. It's fine. There's not I mean, the big benefit is taxation. The taxation can be lower, but if you're after 10 years, you have to pay the same taxation anyway.
I have two more questions. First of all, is there any way to get around taxes, tricks, whatever? I mean, legal tricks, of course.
So my background is how to help you make the money. It's less about how the taxation stuff works. Although I'm thinking about maybe I'm going to have another session with a tax advisor in the club. Um, but you're only paying tax on money you make. So although it's annoying, it is also a good thing versus if you don't make money, you're not paying tax. But I cannot give you tax tricks in this session in a way that's
Right, I
actually
see.
helpful.
And just one more thing. It sounds like not for like from beginners to just before experts, kind of sounds like the whole game is 15, 20% yearly, and that's like great. Like that sounds like that's like you're booming. I mean, you showed one screenshot of one guy who made 50%, 60% in a year. Like that sounds like he obviously had some kind of Navi working for him. But like it
It,
sounds
wa- it
like
was it was 2 years and a bit of change. That guy actually is on this call here. I'm not going to, but that was again, that's 25%.
right. But like I'm saying, if you're working with smaller numbers, that's gonna go a very, very slow pace. Like what I'm trying to ask is like there's no shortcut, I'm guessing, to like
Think about it like this. It's a shortcut for whatever money you have that's sitting there in a savings account doing nothing. It's a shortcut to make that money grow for you. You can't change the fact of if you're like, look, if I've got like if I'm like if you have a certain amount that's not as big as you want, okay, that's a reality, but you can at least make that amount grow. It's way better than it not growing. And once you see it growing, it will likely encourage and inspire you to say, how do I earn more so I can make that pot bigger so it can start to grow more for you? Um, there
but I
are
should feel fine with like 15% yearly. I shouldn't like, you hear your friends saying here or there, like I made like 100% this year. I made 200%. That should be like I'm doing something wrong, right? It's like the idea of the stock market going in sort of conservatively is yeah, that's a nice start. That you're on the right path, kind of.
you would see that anyone that's making 100% one year is probably losing 50% the next year. Because to do that, you have to do very risky things. And you might be right once or you might be right twice, then you might be wrong once or twice, and then it's a totally different mental mind game versus this. And it's most people don't win at that. So if you have a friend that actually you say, show me your earnings on your phone or your thing. Let me actually see what you're saying is real. And I can show you that over even 2 years. Um, introduce me to that person. It's not that they don't exist, but I just don't want you to be influenced by friends that are not actually doing what they're saying they're doing.
I see. Okay.
Okay, guys, we're at 10.
Kind of like that, an answer to that question is kind of like what Dave Ramsey says, which is don't take investment advice from broke people. So don't take investment advice from people who think that they're making 100% every year.
Like it's just again, see the evidence and you need to see a trend, not I won a lottery ticket. Because someone wins the lottery once doesn't mean the next time they play the lottery they're going to win it. I will say there's 50 of us still left on here. I would love this is actually awesome. Seeing like the questions and like the different ideas from different people and the insights. You guys, you should all join me in the investing club. All of you guys should. It's going to be awesome. And the $700 course that's part of it, which is ridiculous, is going to be awesome. Click, join me in it if you're interested. And I think I want to do more of these kind of sessions where it's just like, I was actually thinking, I wasn't sure whether I was going to do it, but also an in-person meetup, I'm not promising I'm going to do it, but like a day-long session with a few different people where it's like also going through all of our portfolios, learning stuff, sharing knowledge, all that kind of stuff, and meeting in person. I'm not 100% whether I'm going to do it or not because it's a big effort, but if there's more of you in the club, then there's more chance that it will happen.
Malcolm?
Yes.
Hi, it's Yael.
Hi.
I wanted to ask you, what's the time investment for the course? Like, how much time do you think it
The way that
takes?
I'm going, you're talking about the
The
complete
new
course.
the uh what you I forgot what you called it. What you were advertising just now.
So
The
that is
plan.
a course where I'm going to release each one class a week. Um, so basically, you'll get, I guess, over 3 months, you get almost all of the course. Or if you're going to stop after 3 months, I'll give you the rest or whatever. So think you have a course once a week for an hour.
Okay.
Yeah. And you can go at your own pace. It's not like you have to do things. It's just going to give you more information. It's going to see a lot more examples, new insights, practical stuff in the market. That's the game plan for it. Ah, Benji, nice to see you. My recent roommate in Mexico City for the retreat. Okay, everyone, I'm going to go. I recognize so many of you, and it's really nice to see you guys and the years we've been working together. And I also appreciate it because through this and the encouragement, and believing in the program and things, then steps like doing television university, things happen from people hearing about the program and people doing it and all the good stuff. So thank you all.